Welcome to Securing Your Brand with SecureMark Legal. On this podcast, we break down the legal side of branding and protecting your business without the legalese. From trademark, copyright, and contracting tips to real-world case studies, we're here to help you safeguard your business, your brand, and reputation. We are here to help entrepreneurs, creatives, and business owners protect what they've built through smart, strategic IP solutions.
Welcome to Securing Your Brand with SecureMark Legal, the podcast where we talk about how to build, grow, and most importantly, protect your business through smart branding and trademark strategies. I'm Melissa Jetta, a trademark attorney who loves helping entrepreneurs protect their brand they've worked so hard to build.
And I'm Holly McFall, your co-host, trademark and copyright attorney. Each month, we sit down with industry leaders, entrepreneurs, and brand experts to explore the intersection between creativity, business growth, and legal protection. Today, we're excited and maybe slightly nervous to welcome Tiffany Gonzalez, who is an accountant, but really here to take the worry out of our tax preparations with practical tips and guidance that we can start using right away.
Tiffany, I'll admit, I'd rather go see the dentist than go to my accountant. And we're the business experts. Eek.
Tiffany Gonzalez, CPA, helps small and mid-sized businesses build efficient, practical accounting and financial systems that support growth. She has experience working with clients across the hospitality, legal, consulting, real estate, and construction industries, and specializes in tailored controllership services. A Miami native, Tiffany is a Florida licensed CPA with degrees from the University of Miami and Florida International University, and is a member of the Entrepreneurs Organization South Florida chapter. Tiffany, welcome to the show.
Thank you so much for having me. I'm so happy to be here. You know, we all three of us love helping business owners, so it's a great place to be.
Awesome. So diving right in, a small business financial reset for the new year. What does a financial reset actually mean for a small business owner in the beginning of the year?
Yeah, so three things. The first thing is the process you have for doing your bookkeeping. This is one of the most tedious things as a business owner that we have as a responsibility. And this doesn't necessarily mean doing it yourself, but it just means if we're resetting the new year, we're looking at what is our process now? Is it working? Or is it now time to bring on some help because maybe I wasn't able to keep up with it last year? The second is the tax plan. What is the tax plan for the business this year? You know, a lot of times we get consultations maybe year two of our business and we don't revisit it for several years, and what works for you in year two isn't going to work for you this year with everything that's changed with the big beautiful bill. And then the third would be cash flow, because that's truly king, right? If you have enough cash, you can fund your operation and you can fund growth. So it's really looking at like, how do you manage your cash flow? Do you just look at the bank account and say, well, I got some cash, so I think we're good? Or do you have a systematic way, a spreadsheet, and however you were doing it before, is that still working for you, or it is going to work for you with the plan that you've set for the year?
That makes a lot of sense. So what are those like cleanup items that everyone has to do at the beginning of the year, getting ready for the tax season?
Yeah, so the first thing is really working on closing the books for last year. Like, you know, now that January has started, it's 1099 season. Everyone has to be getting out their 1099s, and you can't send 1099s if you don't know how much you paid your vendors or who you paid. So it's really about reconciling those books ASAP, even if, you know, you've let it go for a few months. Um the second might be, you know, looking at the personal and business expenses. As business owners, we might be out and about and incur a parking charge and accidentally put that on our personal. And then we might not capture that in our business and lose out on that deduction. A lot of times when CPAs talk about mixing personal and business, a client might default to thinking, that the CPA saying, "Oh, you're putting your personal stuff inside your business." But a lot of times what it really means is you're putting business stuff in your personal that you're missing out on. And maybe the third thing on that cleanup this month is really making sure that as those forms start coming in, 1099-Ks from merchant providers, W-2 payroll forms for payroll you've issued, you're putting all of that in a nice place, like a folder if it's physical, or even a computer folder, because your CPA is going to want that all in the next 30 days.
Yeah, getting all that done in a time period is complicated.
Yeah, it is. It's interesting. The season's only 3.5 weeks long if you think about it. 3.5 months long. Yeah. It feels like 3.5
Yep.
weeks.
It does.
So, if someone only has, say, 60 minutes a week, what do you want them to do every week?
I love this question. I love this question. It would be amazing if we could do all of it in 1 hour, but we can do a lot. We can do a lot. So the first 10 minutes, I would say you'd want to look at your bank and credit card transactions just to see if there's anything unusual or duplicated or something you might need to dispute. The next 20 minutes might be categorizing things that you know you'll forget later, right? The things that you'll always see, maybe your utilities and stuff like that, you know what it is, but maybe it's a meal, maybe it's a person you paid, you just don't want to forget. Then I would say another 10 minutes could be spent on following up for cash. So this is your invoices that are outstanding. Even if you pay someone like an accounting service to do the follow up, there is nothing like the business owner checking in and reaching out and saying, "Hey, I see this bill is still outstanding." A lot of times, some friendly nudges by the business owner help too. Maybe another 10 minutes glancing at cash. So what do I have in the account? What do I need to spend in the next 7 days? And then the last 10 minutes on tax. So depending on how much money you've made in the last week or so, considering setting some aside for tax purposes would be a nice way to prevent a year-end scramble.
Mhm.
Yeah, you can kind of turn that into that weekly routine into like a kind of quarterly. Okay, I've already done this, this, and this, and quarterly, I kind of clean this all up and making sure those 3 months. And it's kind of a great way to be ready for tax year at the end of the year, too. Now, if you start the good habits right now.
Exactly.
So, what is your personal weekly routine? What do you find like is giving you the biggest payoff?
Yeah, so I even myself, I delegate the bookkeeping of the business, but there are of course things that I need to analyze. So the first thing I do is that first one always. I review weird stuff, right? Because your bookkeeper is not going to know if you authorize the charge or not per se, right? So I take a look at some weird stuff to see, okay, are these subscriptions still serving me? Did I sign up for this? The next thing I like to do is my historical comparisons. So I like to look at this week versus last week, this week versus the same week last year. I want to get an idea of whether I'm doing better than the year before, whether I'm doing better than the week before. The reason why I look at both is because it can be very confidence building comparing one year to the next because it's so big of a time horizon, but it's also a reality check when you check against last week. Um, the next thing I'll do is I'll look at cash flow. So I want to get an idea. I want to be cash positive every week, right? I want more income to come in than my expenses went out. And this particularly for in my industry, it's not so big of a deal, right? But in some industries where cash flow is very tight, they're looking at this with a lot more time than all the other things I'm talking about. And then the last thing I have on here is tackling sales. So surprisingly, I look at not just maybe invoices outstanding, but opportunities. So I might look and see, well, last year, this week, Mr. John Smith paid us for this project. Maybe he needs the project again, or maybe John Smith needs something again this year. And I will use that as opportunities to try to reach out to get more sales as well.
It's kind of a great way to clean up your week. Start Monday fresh, do this routine weekly, and then monthly do more of like a bigger audit. Kind of really cleans up your week and gets your quarter starting every year timely, which is really good advice
Exactly.
to me too, because I have a tendency to do it quarterly.
Yeah,
Okay,
for
we're
sure.
admitting all our evil accounting sins right now.
Exactly.
You mentioned earlier separating your business and your personal finances, which every business owner should already be doing. But let's talk about that. What's like the simplest way to set that up to make sure we're not mixing everything?
Yeah, so you want to have your business checking account. You want to have your business credit card. Now, there's a common misconception that if the business credit card or if the credit card is not in the business's name, you can't use it for business. You can use a personal credit card for business. You just want to dedicate that card for the business, right? And this allows you to, when you're searching through your wallet for things to pay, being able to pull a card, even if personal, for the business. I would say that similar to that routine that I have on a weekly basis, a nice monthly routine would be to go through your personal accounts and just glance at whether you have accidentally run something through the personal and then communicate that with your bookkeeper via, an itemized list or some receipts because you definitely want to capture that. Having a savings account for the business is also important. Sometimes clients will depending on their goals have more than one savings account, so one savings account might be for short-term cash needs and then another one might actually be for taxes, and that's really good too.
So, what should owners do about subscriptions and recurring charges that cross personal and business?
Yeah, so here if it's primarily business, it should be in the business, right? And if it's primarily personal, it shouldn't necessarily be on the business. And this one is interesting because, you might find a business owner paying for Netflix. You know, uh, is that really pertinent to a law firm or a CPA firm? Probably not. But the story I have heard before as well, in my reception, we're playing movies. Um,
Uh-huh.
so those subscriptions are very small individually, they can add up. And here you just want to make sure you're creating a boundary and a fine line because what you don't want is the IRS to start questioning transactions, which can open up a can of worms to legitimate transactions as well.
That's really
Yeah,
true.
definitely.
I
Yeah.
guess it's a good thing we're a virtual office, Holly. We can't have Netflix playing in our waiting room.
Yeah.
But how should someone handle a business expense that they accidentally paid personally or a business, a personal expense that they paid business? How should they handle that in their bookkeeping?
Yeah, so there's two ways. And this one's a very first clean way, right? The first super clean way would be to get reimbursed. So you spent, I don't know, $30 on parking. The business would then reimburse you in the next payroll run as a non-taxable miscellaneous reimbursement. It would get captured in the books in the same way that you would reimburse an employee for incurring an expense. But another way, and this sometimes happens when the business is tight on cash, is that we make a journal entry to record that the business owner contributed this amount of money to the business. So, for example, I recently had a restaurant client that had to pay their property taxes, and the business doesn't have enough funds to do that, and it doesn't have enough funds to even reimburse them. So, we created the capital contribution on the books that they then paid those property taxes. So, they get credit in a sense for having paid that. It'll reduce distributions they've already taken. It'll create a loan in a sense for them to get paid back. But the business will still get the deduction.
So, Tiffany can help us be ready for tax season readiness without the stress. When should a business owner start preparing, and what's the first step?
Yeah, right away and right now, it's the bookkeeping for sure. Uh, Business owners that close their books in the first 2 weeks of the year are typically the most successful because, believe it or not, the business tax return deadline for S corps and partnerships is in March 15th. So right now would be the most ideal scenario. We're sending out the 1099s, and as soon as we're done with that, we're starting to prepare the business tax returns. But if that's still in progress, it's not that big of a deal because we can always file an extension. Ideally, especially if you have a flow through entity like an S Corp or a partnership, you do want to have your things done by April 15th either way, because even with an extension, you'll have to make an estimated tax payment, assuming you'll owe. And so we do want to get an idea of how much the business made. When talking about reconciling the books, it's more than just entering data and reconciling the bank account. It's also when you look at your balance sheet, it's also making sure that things are stated correctly. So if you have any loans outstanding, that the balance of the loan matches whatever the statement is for that loan, that any vehicle you purchased is listed there appropriately, accounts receivable, accounts payable, all these little things on the books for sure. And if a business owner doesn't feel confident about their books, now would also be a great time for them to be reaching out to their CPA to let them know, hey, I really need help with my bookkeeping for tax purposes.
You talk about bookkeeping, about being organized, but it's more than just like making sure that everything is entered into the books. It's really looking at all of those reports. What reports should we be able to pull quickly and look at either monthly or quarterly that are going to be due at the end of the year, but we can track that way?
Yeah. My favorite is the profit and loss, of course. This is your revenue and expenses. It tells the truth about whether or not your business model is profitable, right? It tells the truth on, okay, we've got this revenue, here are these expenses. Do we make money after these things happen? Um, the balance sheet is the second great report. This is where you stand in what you owe and own in the business, right? How much you have in the bank and who you owe, credit cards and vendors and things like that. And then the third is actually the cash flow statement. This one gets overlooked quite a bit. And this tells the story of where your cash went. Because believe it or not, the profit and loss can sometimes lie to you. It can tell you that you made money, you have net profit, but when you look at your bank account on your balance sheet, it's not there. It's not there.
Mhm.
So where did it go? And the statement of cash flow, what it does is it reconciles both those statements to say where the money went. Sometimes the reason why you might show profit on your profit and loss but not have it is because it's in accounts receivable. So there's customers you're expecting to pay you. So the profit's actually on their side. That might be one scenario. Being able to pull those reports easily is key.
All right. So, what are the most common mistakes that increase taxes or delay filing?
Yeah, so waiting to categorize until now, that's fine if it happened this year to you, but you want to set a goal for next year, or this year, I should say. You want to set a goal for this year to make that change, because categorizing more often, as I just said, can also help you make better decisions in your business, right?
Mhm.
It can motivate you. Um, Not tracking mileage is another big one, as everyone usually takes some sort of auto deduction, and the IRS is getting stricter on what those deductions look like and how they're calculated. And everyone should have a mileage log, and there's a lot of great apps for this. Um, and another common mistake is misclassifying contractors and employees. This happens, and we try to consult clients during this busy time if we see it happening, because that could create a huge problem later. And last thing I would say is ignoring things on the balance sheet, focusing too much on your profit and loss, so your revenue expenses. Ignoring things on the balance sheet might be things like loans that have been made in the business. Are they still actual? Is that the right balance? Was interest split between the principal? Owner loans that have been made, are they still actual? Were they paid back and that's just miscategorized? Those are the most common mistakes we see that could either delay the filing or increase tax altogether.
That's a great wrap up of where things were and where things should be and how we should get ready for next year. But there's been a lot of changes with the one big, beautiful bill, and we're expecting some changes in the 2026 tax year.
Yeah, we definitely are. Some and most of them for the better, especially for business owners. One of the biggest things we've seen come back that's all over the news is the 100% depreciation deduction, the bonus depreciation. And the reason why this is such a big deal is because it motivates you to buy equipment, it motivates you to buy real estate. You get a much larger deduction in the current year now than you did the year before or the year before that. And so we're seeing a lot of business owners incentivized and motivated right at the year end last year and now even this year to make big purchases to reduce their tax bill. other things that are benefiting not just the business owner but the individual as well is the raise to the SALT, state and local tax. And this is, for some time now, we have been capped at $10,000 of a property tax deduction. And with the value of home ownership going up and up and up, um, there are many people paying property taxes well over $10,000 and they're not able to deduct that difference. Now that limit has been raised to 40,000 and most people will qualify. There is an income threshold where after that amount you no longer qualify. But what this does is it creates a additional tax savings without having to do anything additional, right? Everybody's still going to pay their property tax and on time, but now they can deduct more of it. So they'll see more of a benefit in their taxes without having to go out, let's say, and buy like the 100% bonus depreciation, for sure.
There is some big changes.
Yeah. There's many more. I mean, the raise of the child tax credit quite a bit. Let's see, section 1031 for real estate stayed the same. But there's so many different nuances and some for even some for industries that you'll want to take advantage of before it's too late.
So, what should business owners do differently when tax rules change without getting lost in the weeds?
Number one, you want to have a great CPA that stays up to date on all of this. You want to have a nerdy CPA like me. It involves a lot of continuing education during the time leading up to the bill changing, and then once the bill does actually change. And then what that means for your business, right? Because there's so many different changes, you want the CPA to be fully educated on how that impacts your industry. And then once the bill passes, it's really about valuing your CPA's time and saying, hey, I want to have a meeting and see how this is going to impact me and what are the actions I should take either before year end or next year to take advantage of this. And a good, honest CPA will immediately be able to think of some and say, you know what, let's do it. Let's book the meeting because I know I can give you the value.
Are there certain business owners or certain industries that should be paying closer attention, and why?
Yeah, so I would say anybody in real estate, and I'll explain why. And when I say real estate, it could even be a daycare owner that purchases the real estate with the daycare. The reason why is because of the 100% bonus depreciation, uh real estate, we can depreciate real estate, right? And normally real estate is depreciated over 27.5 years for residential or 39 for commercial.
Mhm.
But with something called a cost segregation, we can actually accelerate portions of that building to be in buckets that are faster, more rapid than 27.5 and 39. And those buckets historically were 5 years or 10 years or 15 years. But with 100% bonus depreciation, that same bucket, 5, 10, and 15, is now year one. So as an
Oh, wow.
example, yeah, it's huge. As an example, I had a client that has a daycare that he made a daycare purchase for $1 million. It was the real estate plus the business. And after doing the cost segregation on the real estate, we were able to save him close to 300,000, 100,000 in taxes, $300,000 deduction, $100,000 in tax savings. And so he was able to use that $100,000 in tax savings to then go get the next daycare that much faster, right? So, um, real estate is really one of those really large deductions you can take, and there's a big discrepancy in your cash out versus your tax savings as well. What I mean by that is you might go out and buy a piece of property and put down 50, 60, 100,000, but then end up saving 120, 150 or so in a deduction. And so you get a deduction larger than the cash output, which is always ideal. Businesses also that are in the auto industry or have delivery trucks, so maybe even a dry cleaning company that is thinking about adding a delivery service or a restaurant. So when you're purchasing heavy vehicles, these are vehicles over 6,000 pounds, you're able now with 100% bonus depreciation to write off the entire vehicle. even though you financed it. So as an example, maybe you purchased, the Sprinter van. I'm going to assume it's above 6,000 and it's $60,000, but you financed it. You put $10,000 down and then you're paying a bit over time. You can write off the entire 60 because it's all 100% bonus depreciation upfront. You won't be able to continue to write it off, right? The only thing you're writing off after that is the interest portion of the loan and then maintenance, gas, and all of that. But again, it's such a beautiful deduction. It's such a beautiful accelerated deduction. It's essentially a motivation. It's an incentive for business owners to go consume, grow, finance in order to grow their business.
It's so crazy that you can now, even last year and this year, be able to purchase new equipment, new business, and even new real estate and write that off. That's a really great way to grow your business as you're in this process of
Yeah,
moving forward. That gives you an opportunity to do such.
100% for sure. Yeah, it's a huge motivator.
It is. Tiffany, this has been such a great conversation. We have come with like practical tips, insight, and actually like ways that we can work going forward. Thank you so much for joining us today.
Thank you so much for having me. I really appreciate it.
And for our listeners, you can connect with Tiffany Gonzalez, CPA, and learn more about her work. Tiffany, you want to let the audience know how they can get in touch with you?
Yeah, so Accounting to Scale is our amazing firm located here in Miami, Florida. You can call our office at 305-503-2814, or you can check us out on the web. I'm going to tell you now that we have a YouTube channel with over 8,000 subscribers. You can find us on YouTube at Accounting to Scale. And we just love making videos and free educational content because we truly believe that education is what's going to take you to the next level, especially not just in your business, but in personal finance as well. So check us out there, follow us, like, subscribe.
All those things that we never want to say that we always have to say. Follow
I
us,
know.
like, and subscribe. Um,
Engage.
Exactly. Ask us questions, get involved, talk to us. That's
Yeah,
really what we want to do. We want to talk to
yeah,
our audience and we want to understand where their business is going, what their business needs, how to
yeah,
protect it, and then how to save them money in the long run.
yeah,
It's really what the three of us are here for.
exactly. That's so true.
And if you're building a brand and haven't reviewed your trademark strategy yet, now's the time. Don't wait until there's a problem.
Thanks for tuning in to Securing Your Brand with Secure Mark Legal. We've enjoyed having you today. Enjoy, like, subscribe, all those things.
All the things. Thank you, Holly. Thank you, Melissa.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.